Hi, and welcome back to this special lecture series on product costing. I had delivered the intro session yesterday, and let's continue with that today. And as you understood, as based on the yesterday's lecture, that we have direct cost plus indirect cost, and this total works out to be total cost. Now, how this gets attributed to the product is the question. Now, when we have our direct material, direct labor, and direct expenses, these directly get attributes to the product. No problem at all. So that gets directly attributes to without any intervention or any interference. It's a direct absorption. It gets attributes and it gets packaged to that. On the other hand, the indirect cost, the mechanism of indirect cost that cannot directly taken to product. Reason is it's not directly proportional. It is the incurring of indirect cost. It has got nothing to do with the outcome or the output of the goods and or the services. So therefore that gets collected or accumulated to an intermediary position. And where the total indirect cost or the overheads, I can use both the words, indirect cost or the overheads, gets accumulated, and then we use a mechanism here that through that mechanism what we do is we do a mechanism called absorption mechanism. Based on that absorption mechanism, a portion of, it could be a majority of the portion or sometime more, sometime less, will be transferred to product cost. Now supposing let's say you have incurred overheads of 100,000. Based on the absorption mechanism, you could take it to product, could be 90 or sometime 100 or sometime 110. It all depends. The way based on the way we use the mechanism of absorption. And any difference, the difference from this gets transferred to our profit and loss account. Get transferred to profit and loss account. Now this product, the cost, the direct cost and the portion of indirect cost get accumulated to the product cost. Now, my intention is not to go into talk about these mechanism in detail. This is just to give sort of a brief or recap of that gets work in a real life or practical scenario. Now let's try to understand how we work out our product cost in our real financials. Now, if you really think that this is a factory or this is our factory or this is our company which has a factory, and this factory has a purchasing department and a warehouse and so much of production units. It could be production flow 1, 2, 3 and 4 and so on. So now initially the company from a financial accounting point of view or from operations point of view, what they will do is they will procure the all the inputs, procure the required inputs, such as they will buy material, also they will pay salaries, and also they will pay for all these expenses, utility and other expenses. So then we need to understand what is the accounting entry for this. So what you must be doing is, you should be debiting all these account. For example, you would debit to materials account. You would debit to materials account, and then credit to cash or supplies. If you are buying by cash or paying by bank, then you will use cash or bank, or if you are buying on credit, you will credit to supplies. The second scenario is where if you are paying salaries, you will debit to salary expense account and then credit to cash or bank. So this is the second entry. The third entry will be debit to expenses account and then credit to cash. So I believe these entries are very straightforward and very clear, easy to understand. Once you get all your, you see, you have your material here, materials control account we call it. I debit what I purchase from, let's say I'm purchasing from suppliers. I debit here. This is the first entry. If you see here, this entry actually. That entry only I am recording here now. So, and I will also have salaries account, and I will debit here, and probably I will credit to bank. And I will also have expense account, which I will debit here and then credit to cash or bank. So this is done. Now what happens is, the viewers or my friends, after the items have reached to the warehouse here, these users here, the users from these respective departments, they will be receiving these materials for their purposes. So you then have to issue such materials to, you have to issue these materials to production floor. So then we have a given account called work in progress. So what we'll be doing is, for example, let's say if I have taken 5,000 kilograms of material, then I will transfer that much amount of material consumption to the work in progress. So I credit here and transfer to work in progress, and then I will debit here material. Secondly, based on the extent of labor usage to the production, so we would be transferring that much percentage of salaries to the work in progress. So we will be transferring that here. So you see, this one from here will get transferred to this account. So if you do that, here you will have labor. Likewise, from your expenses, you see, if you have to please remember the mechanism that I was talking about here. This mechanism here. Based on this mechanism, I would be transferring the amount of expenses that I absorb for the purpose of production. So that I will credit here. So overhead, that getting absorbed. So this amount of overhead that I am absorbing, I will transfer to this account over here. So that overhead will come. So with that, Here again there are some other nitty-gritties, like for example, you will issue material at the end of the month. Sometimes the factory floor may return materials, so then you need to reverse the entry. The return entries may come in. Likewise, you may have to think about other type of, and then also you may have damages. Material that used in the factory floor could undergo certain damages, so which need to be scrapped. So those entries also needed to be factored. Now, here I would like to talk about something called standard cost of a product. Sometimes people call it standard cost card. Sometimes they call it like this. So, here what happens is, every beginning of the year, the management comprised of production people, finance team, senior management, CEO, MD and chairman all together will include and evaluate and understand how much would be the total cost of any given product. So let's say they have a card. This is not, this wording is used coming from our conventional time. So those days, a manual printed card. So that's why the card name came. So we have this card here. This card, they will say direct material. Maybe we may have more than one direct material. One direct material 2 and so on. And then I may have usage. Let's say 2 kilogram, and each kilogram I have to pay $3. So in that case, my total material cost is 6. And then I also have direct labor, 5 hours, and each hour I am paying $4. So that would be 20. And overheads, for the 5 hours, I would be paying like, let's say $5. So 25. So total coming 45, 51. Sometimes you also please remember, we may have to factor normal losses. So those normal losses needed to be factored here. And now this is the total product cost. So this total product cost, then here you see, we have work in progress, and we at the end of the month, we might end up producing 5,000 units. So these 5,000 units, what you need to do, you need to multiply by that standard cost. So you will credit that here and transfer to finished goods account. So you will have finished goods account. So this finished goods account, you will debit whatever the amount you are transferring from the factory floor. Please remember, this is coming from work in progress. You may have opening balance. Sometimes your warehouse may have opening finished goods. And then your business will be continuously doing sales. So that company will take out finished goods from the warehouse for the purpose of distribution and sales, and then that will be transferred to from here to cost of sales. And therefore, I would have closing balance here. That closing balance will be carried forward to the next month. Now I have cost of sales account. So that is the inventory, that amount that I have consumed. So that I transferred from here to here. And then I will have my sales account. Sales, you would credit here, and then you would debit to receivable or cash. Then later you will calculate your profit and loss account. So this is the next video that I would like to present, and I would bring up with some additional discussion in my third video. Thank you so much for watching on this, and keep tune on Muhammad Ashik Khan YouTube channel, so that you will be benefited with lot of financial management, financial accounting and other related videos for your benefits. Thank you so much.